Today is not a supply chain management topic per se, but it's an economic topic regarding a current event, and none of the material is going to show up on a test or anything, but if you were not present in class, you are going to have to take a quiz on it. It'd be a pretty easy quiz, but you're going to have to take a quiz on it. And the announcements here, just remember there are some upcoming assignments. Okay, to start this off, Sam, tell me one thing you're thankful for. Your parents? Okay. Where's Gavin? Gavin, what's something you're thankful for?
Oklahoma State.
Oklahoma State? I hear that. Justin? Which one's Justin? Rutledge?
Family.
Family? Okay. You know what I'm thankful for in the last 2 days? Reddit. Because I've had the pleasure of living through the most interesting 2 days that I've ever seen. And we can all thank Reddit for it. And so what we're going to be talking about in this class is a current event that was started by Reddit and is one of the funniest things in the world. Now, it's kind of bad that I think it's funny because it's hurting somebody. But it's still funny. And I think everybody else thinks it's funny. Does anybody know what I'm talking about? Raise your hand if you know what I'm talking about. Okay, so every single guy knows what I'm talking about. That says something about your sense of humor. Okay, yep. The Game Stopper thing. Do I even have? Yeah. So what we're going to be talking about are the things that's been going on between Reddit and GameStop in the past few days. But this is an economic topic because I want to make sure it has to do with the thing called short selling stocks, and I just want to make sure that you understand the fundamentals of it. Like, now there are some things I don't know about this because this isn't my area, and I'll try to be pretty clear about one thing I don't know. But the story itself is pretty simple, and I figure if you're going to go to college and you're going to have an economics degree or a business degree, you should be able to read news stories like this and understand what's going on in the background. Okay. So to start this, if you haven't seen and heard anything about this yet, you'll go to a news article and you'll see something like this. This was a New York Times article, Beating Wall Street as its own game. GameStop shares have soared 1,700% as millions of small investors, egged on by social media, read shitposting, egged on by social media, employ a classic Wall Street tactic to put the squeeze on Wall Street. Now, GameStop is just a store where you can go in and buy used games, right?
Or new.
Or new? Okay, so just used, new games, all stuff. And it's a company that hasn't been doing well lately. There's no reason to think that this company has much profit potential. As you'll see, its stock has been going down a lot, but then it went up for some very funny reasons. And so what I want to make sure is you're not like him. You're not looking at this and saying, okay, I've got an economics and business major, but I don't know what shorting stocks is. I don't know what a hedge fund is, that kind of thing. So we're just covering some very basic things about this. And well, if there's one thing I've learned from this, so I saw a bunch of memes about what was going on, and then I asked one of my grad students who is on this subreddit all the time, and the memes were right. So you're living in a great age where you don't have to hardly read much words at all. You can just put a few words with pictures, and you're basically, and I'm being serious here, you're basically getting the whole story for the most part. But I'm focusing on the stuff that won't be in the memes, like what does shorting stocks mean? What exactly is a hedge fund? Turn on. Okay, so we're going to start off with some of kind of the boring stuff, but here's some of the mechanics of what's going on. And I just threw this together this morning, so I didn't have time to print out the slides for you or anything. But from the Guardian article, they said last April, when the company, GameStop, announced mass closures, GameStop shares, GME, could be bought for $3.25 each, less than Rachel's meal over there. On Tuesday, they soared another 92% to end the day at close to $148 per share. Pumped up by small investors, that's a little bit deceiving, I mean, there are small investors, to ruin Wall Street bets that the price would crash. It's a bet that has so far proved very costly for the professional financiers. And so the strange saga of GameStop's cult status can be traced back last September when Ryan Cohen, investor and co-founder of online pet food giant Chewy, took a 13% stake in the retailer and started lobbying for it to move more of its business online and become a serious rival to Amazon. Cohen and two associates were added to the company's board in June. The company's share price began to soar. And so just, something little happened. The board of directors changed. Some people saw that, well, maybe something will come out of this. Let's start buying the stock. So the price of GameStop shares starts going up. A small investor snapped up on a cheap stock using the trading app Robinhood. I'd never heard of Robinhood until this story, but my grad student has it. It's just an app you can put on your phone and trade stocks. Does anybody use Robinhood? Okay. And I think like when you sign up for it, they give you $30 to start with free just to trade or something.
I think if you put so much money into it.
Okay. But it's nothing. It's just a place that lets you buy and sell stocks, that kind of thing. And others seizing upon what they saw as an ideal buying opportunity. Wall Street saw something else, a chance to short an ambitious bet against Amazon they believed was bound to fail. So far, nothing weird is happening yet, nothing funny. This is normal stock market stuff. Stock prices fluctuate a lot. Small things can make a stock soar up or down. But what happened, the board of members changed. Some people have some reason to think, well, maybe something will come out of this change. And then other people said, this price is going up way too much. We don't think the price will stay this high. I think the price is going to go down. I want to make money based on my belief. Okay? So all it is some people saw this GameStop share that was overvalued, and they thought the price would go down, and they wanted to make money off that belief. And so they're going to do something called shorting a stock, and that's what we're going to talk about. So shorting a stock. How do you short a stock? First, to make sure you understand some of this terminology. When we talk about positions in speculating, whether it's ag commodities, futures, ag futures, or whether it's stocks or something like that, our position is like whether we think prices are going up or whether prices are going down. And if you think prices are going up, and you act on that belief to try to make money, you've taken a long position. If you perform an action where you try to make money thinking prices will go down, that's a short position. So when people taking a short position against GameStop, that just means they think the share price is going down. And most of us, when it comes to stocks, are more familiar with the long version. So most of us, when we trade stocks, most of the time we're in a long position, meaning we're buying a stock and we're going to hold on to it because we think prices are going to go up or it's going to give us dividends, something like that. And that certainly makes sense because most companies do make money. And so, on average, companies are going to make money. So most of the time when you're getting in stocks, you're taking a long position. And if you ever sell a stock, usually it's because you think the price has gone up enough that you don't think it's going to go up anymore. And then you sell the stock then. And so this is ordinary stuff right now. You think something's going to go up in value, you literally buy it, you have possession of this thing, you hold on to it, and if price keeps going up, you eventually sell it at what you think is a good price. And if you were right, your long position made money. But there are times when it's reasonable to think a stock price is going to fall. and you want to take a short position. You say, this stock is going to go down. I really, truly believe this. I want to do something where if I'm right, I can make money off that belief, knowing that if I'm wrong, I'm going to lose money. Very few of us, when ordinary people are buying and selling stocks, very few of us are taking a short position. As you're going to see, it's something that's quite dangerous because there's no limit to the amount of money you can lose, but you can actually make a very handsome reward from shorting stocks. And so what we're doing now is we're going to talk about how exactly you short a stock. Okay. So just start off with some very rudimentary basics. You know, when it comes to speculating, that you make money whenever the sell price is higher than the buy price. You know the phrase, buy low, sell high. Well, that also means sell high and buy low. We're used to thinking of buying first and selling later, but you don't have to, as we're going to see. But in all speculation, you're saying the sell price is going to be higher than the buy price. That's how I make money. And so if you think a stock price is going to rise, you buy it now, you hold on to it, you sell it later, and then for each stock that you trade, your profits are going to be the sell price minus the buy price. And if you're wrong, if you buy it at a high price and have to sell it at a low price later, this is a negative and you take a loss. Well, if you think a stock price will fall, it's the same idea. You're thinking prices are up here, they're going to be down here. I want to do some kind of transaction where I sell it now at this high price and buy it later at this low price. So again, sell price has to be higher than the buy price for you to make money. But of course, to sell a stock, you have to have it to sell. You generally can't just sell things you don't have. So I see this GameStop price, I think the price is going to go down. I want to sell it at this high price, but I have to have the stock to sell it at that price. Well, I can't just go out and buy the stock because then I'm buying it at the high price. That defeats the purpose. And so what I have to do is I have to borrow it. So what I do is this GameStop price is really high, I think. And what I do is if this was a person-to-person thing, it's like you go out and you find someone who has that stock and you say, let me borrow the stock just for 1 month. I'll give it back to you after a month. And I'll pay you a certain amount of money, just call it X. So you're going to let me borrow this stock for 1 month. I'm going to give it right back to you after a month, and I'll pay you a certain amount of dollars for the right to borrow it. And after I borrow this thing, I go on the market and I sell it at that high price. And then if I'm right and price goes down, I later just go back and I buy it back at that lower price and I give it to the person I borrowed it from, and I made money because I sold it at a high price, bought it back later, and then returned it. That's all shorting a stock is. It really is as simple as that. And it's even simpler in the real world because you don't, like if I wanted to short Brock's computer, and I said, people think Brock's computer's special, they're willing to pay $20,000 for it. I'll say, Brock, let me borrow your computer for a little while. I go out and I sell it to Sam for $10,000. She gets on it, realizes it's nothing special, and then I'll say, well, I'll buy it back for $2,000. She says, okay, she gives it back to me. I made $18,000 and I give Brock back his computer and give him $100 for the rights to borrow it, and I made money. Now, same thing is going on here, but it's nice that in something like a stock market, I don't have to find someone, I don't have to find someone who actually has the stock. I think there are ways like people are willing to, there's a market where people are willing to let people borrow their stock for a little while. Did y'all ever talk about this in your finance class?
Yeah, so like for every one buyer, there's one seller.
Yeah.
And for every one seller, there's one buyer, at no matter what price it is, because that's just the open
Yeah.
market.
And so there's this market somewhere, and these two people don't have to know each other, just like you don't have to know with stocks. But there's people who say, you can borrow my stock for a while in return for a fee, that kind of thing. Yeah. Brock's, his major was in finance here, so maybe asking him some things as we go along.
I'm pretty sure some of these big they get in with the brokerages, and they can do it like a bank. Like whenever I put my money into like a checking account, like my money's not really there, and so they can do it behind the scenes without you knowing, and you never know the whole time. But it's still your stock.
Yeah, I think you're right, yeah.
So that they pay that.
Just like when you put your money in a bank, they're lending it out to people without telling you first.
That's how the price is going.
Gotcha. Yeah, that makes sense. That makes sense. And of course, the bank has to, they just like when the bank loans out your money, if that person doesn't pay the loan back, the bank still has to give you your money back. And so if they loan your stock out to someone and that person isn't able to give it back, they still have to go on the market and buy it to give it back to you. Yeah. So does anybody know if you can go on the Robinhood app and sell a stock as an individual?
Yeah.
You can?
But you can't sell a GameStop right now.
Okay. You probably have to put up a margin. Do you know?
No.
Okay.
Just once the funds settle into your account, you can.
Okay. Because you can lose so much money. Okay. So really pretty simple, right? All right, so again, I'm going over this again. So when you execute a short, what you're doing is like you pay for the right, there's a certain fee to borrow a stock and you sell it. And you literally sell it on the market and someone out there is buying that stock. And I don't know the terminology. I know the terminology of ag markets and stuff. I don't know the terminology for this kind of thing. I'm assuming they call it execute a short. Does anybody know? Yeah. Okay. And so let's say we sell the stock today for a price of P-sale, and you do actually sell it to someone. And then you have to get the stock back to return it. I'm assuming it's called something like terminate or offset. Do y'all know? After you sold the stock, when you buy it back. Offset. It's called offset? That's what I would imagine. And so we'll call it offset. And that's when you have to go buy the same stock back from the market. And let's say you pay a price of P/buy for it. And of course, it's not, before stocks were electronic, they were on a piece of paper. And if you imagine this piece of paper change, it's not like you go back and you literally get that same certificate that you sold. It doesn't have your fingerprint on it. But one stock is equivalent to another stock. So you just get another piece of paper that says this is a stock of GameStop, but now it's electronically. And what you have at the end of the month, the stock goes back to the original owner. And so your profits are going to be the selling price minus that should say buy price right there, minus whatever that fee is. Anybody know what does that fee go by a certain name or anything? And so someone's given people the right to do this. So why would someone loan someone a stock and require money for it? Like if you owned a stock and I wanted to borrow it from you, why is it that you would charge me money for doing that?
Because there's risk.
And what's the risk? You're going to get it back. Presumably, unless that whole investment firm goes bankrupt.
Investment firm could give a belly.
Yeah, and they could, yeah. And I imagine this also, like if I'm giving someone giving away stock for a month, I can't then sell it if the price goes up or something. So I can't trade that stock in the meantime. So I imagine that's another reason. Well, no one's going to especially investment people, not let people borrow anything. It's going to be a price. But and I don't even know how expensive those things are. You're getting an ag economist training in short selling stock. That's what you're getting today. Okay. Now we're going to look at like when you make money and lose money for this. And there's a couple things that's just kind of really important to understand the nature of selling. And so you probably get by now that you're going to make money when you sell it at a higher price than you buy it from. But let's look at some different outcomes. So we're doing the stock where this is time on the x-axis and this is the price of the stock here. and we're going to execute here, we offset here, and then I've got 1 month here. I don't actually know how long you can hold on the stock for. Does anybody know? 1 month just seems, I'm sure that's sometimes negotiable. Some of this is probably done like through standard contracts. Sometimes you can arrange, you can do this on a person-person basis. Like you go into a firm, you say, this is what they did in the housing market. You say, I want to short this mortgage-backed security, and you work it out with just one financial firm so nobody else knows about it. But there's a limit to how long you can hold on to that stock. And I'm just going to say it's 1 month. And so when you execute this hedge and then offset, you have to get everything done within the 1 month time. So that means if you think prices are high, if you think prices are going to go lower, they have to go lower within a month, otherwise you can't make money. And that's what's going to make this thing with GameStop so interesting. And so what we do when we execute this hedge, and this is a profitable outcome because prices did go down before the 1 month period ended. So let's say we execute the hedge and we sell the stock at that price, pretty high. And maybe the price still goes up a little. We're starting to get worried. And what short sellers are known for being really obnoxious. They're jerks because they have to be. Because if I think prices are going to go down, remember, I have to make sure they go down within a month. So I start spreading every gossip and rumor and sharing every piece of information that I can, attesting to why I think the stock's going down. And I imagine usually to do it the moment they do the short, they release a bunch of documents explaining exactly why they think the price is going down. Casting dispersions, exaggerating maybe more than a little bit, but they also got to give other people really good reasons to think the stock prices go down. Because if other people don't buy into your belief, it's not going to work for you. And so maybe during here, I start releasing information. And with GameStop, what they're doing is they're saying, okay, the price has been going up a little, but all that happened was the board of directors changes. Here's all these other reasons why GameStop is going to get worse and worse and why it's not worth anything. And maybe I convince other people. And so people think these stocks are overvalued. I'm going to start selling. And so prices start going down. That's just what I wanted. And now I got to do the timing right. I got to say, so how low are they going to go? They could go to zero. But they're going to go low and low. At some point, they may get so low people think it's too low and start turns up again. So I have to make a good bet about when I think it's a good time to sell. And let's just say buy. Maybe I decide to buy right there. And it turns out that price still go down a little bit, so I could have made more money if I held on, but I still made a handsome profit. So the price did go down before that 1 month period was over, and again, if it didn't start going down until that 1 month period was over, I'm going to lose money. It doesn't matter what happens a year from now. This shorting stocks was a 1 month thing. And I made money. Sell price minus buy price was big. And I get that whole thing for each share I sell. I have to take some of it, and there's that stock rental charge. So the person who lent me the stock, they get some money too, but I made a bunch of money. And so the most I can make, if I sold up here, I make more money as the price goes down and down. And the price can't get below zero. So the most money I can make is the sale price minus that rental charge. But if I'm right and I convince other people that a company really is in bad shape, I can make a lot of money. But of course it might not turn out like this. Instead, I could be wrong. As you can imagine, this 1 month time is really tense, a tense time. The person shorting is trying to convince everybody that the company is a loser. They're disparaging the CEO. The CEO is trying to fight back, clinging on to his job. And a lot of smack talking, a lot of shit posting. And everybody else has to figure out who's right. The money, was that movie, The Big Short? Is that what it was called? Was it called The Big Short? Yeah, there was a whole movie called The Big Short about people doing this with the housing market in the 2008 financial crisis. It's not only a good movie, they do a really good job of showing how this stuff actually works. And it's that whole movie is basically 100% true, is my understanding. I mean, I read books about it, and there was even little things about the one character who was storing seeds and stuff like that. So it's a good movie. Okay. Unprofitable outcome. Things might not have gone that well. So maybe I was right and prices really were going to go down eventually, but they didn't go down until after that 1 month time was over. So what happened here is I executed my stock here. I sold stock at that price. But then prices kept going up and up. And I'm like, oh crap, I got to buy this thing back before 1 month's over. And it keeps going up and up. And, you know, I'm thinking, okay, if I buy it back at that price, I'm going to lose money. Maybe I should wait a while, hoping it'll go back down, but the price may go up even more. And so I decided to just cut my losses, and I buy at that price. And even if I know I'm 100% sure, I had to cut my losses there because everything's got to be done in that 1 month time frame. And then I lost money. The losses were my selling price minus my buying price. And the thing here is there are really no limits to how much you can use. Because think about your losses. Sell price minus buy price. That sell price is fixed. You already did that when you executed the hedge. But the stock could go up and up and up. And the higher it gets, the more you lose. So there's maybe it can't go to infinity because that's ridiculous. But conceptually, losses could be infinite. And that's what makes shorting so very dangerous. And that's why there's a few people who are mad at Reddit right now. All right. So that's the concepts. Any questions? There are never questions. So back to GameStop. Now my understanding, I've been on the Reddit page and stuff, is that there's this Reddit page called, subreddit called Wall Street Beats. And the people on this subreddit, a lot of these people are really big time investors. They know what they're doing and they have lots of money. And they're also shit posters. Do y'all know what shit posting is? It's like when you love posting things that causes other people to have anxiety, to get mad. You just like causing trouble. These people are just troublemakers. And they post a lot of memes about other firms and things like this. And you know how social media sometimes people in a certain community will start ganging up on another person? Well, this subreddit will kind of do that. There's a few kind of well-known people in here, and they'll say, I think we should do this. And a lot of time, and almost all the time is from what I've done, they're doing it just to have fun, just to wreak havoc. It's like being a class clown. And what they did, I don't know the exact lines leading up to here, but when the price of GameStop started going up, then they heard there were certain people who were shorting the stock, okay? And when they started shorting the stock, they did the things I was talking about. They started smack talking, putting down GameStop, saying all the reasons why their stock's going to go down. Now, the people on the subreddit know those other people only have, let's say, a month. I don't know how long. They only have a month to convince other people that the price is going to go down. So they said, you know what? Screw it. Let's everybody buy the stock. And there's lots of people on this subreddit. And lots of people said, this sounds like a lot of fun to me. And this is what happened to the price of GameStop. This the blue line here, that is the big tech average of things like Alphabet, that's Google, Amazon, Apple, Facebook. So their prices are still the same, have Bitcoin in there, but GameStop prices are just going up like crazy. And people are doing this to have fun because they know the higher that price gets, the more that short seller is losing and the more worried they're getting. And we're talking huge losses here for these short sellers. And the Reddit people are just having a big time, and they start making memes about it. And then it gets even more fun. Now, of course, somebody's getting hurt here. Somebody's going to lose a lot of money. But at the same time, but not at the same time, but that's what makes it fun for them. And look at, so this is GameStop volume in trading. It's like the number of stocks trading. This is volume for all big tech. And look at the volume. I mean, as many GameStop trades were being made as like all other big tech firms. And again, this is just shit posting. There is no reason to believe that GameStop is a valuable company or a more valuable company. This is just to be an ass. That's all. That's what makes this so interesting. This is something I saw from the Economist, and so the people writing about this are trying to find the right vocabulary to describe to normal non-Reddit people about what's going on. And so they said, what happened? The jump came after users of subreddit Wall Street Bets, a Reddit forum, which now has almost 3 million subscribers, began to take a fancy to the firm. Some posters justified their bullish bets based on the company's fundamentals, encouraged by Mr. Cohen's involvement. But most seem to have been driven by a vigilante-style desire to stick it to the establishment. That's what it was. GameStop was unloved by the vast majority of institutional investors and a target of short sellers. Investors wanting to bet against a company go short by borrowing shares and selling them at the market price. The total value of short positions in GameStop reached about 140% of its market capitalization. After users discovered that a swath of hedge funds had bet against the stock, they began frantically buying shares in hopes of forcing them to take losses. And so they're being an ass, but they know that the people they're hurting are these rich investors, and so they don't feel that bad. They're not hurting normal people like us. They're hurting very rich people. Okay, and this is where a lot of the memes I saw actually really did a good job of telling what was going on. And so Reddit, after going from making memes about mittens, the Bernie Sanders thing, to making companies lose billions of dollars in 3 days. That's really what happened. One day, Reddit was putting Bernie Sanders in all these different areas, just for fun, no consequence at all. And the next day, they're making people lose billions and billions of dollars. That is the power of Reddit. And who knows what their advertisement prices are going for on that subreddit now. Had anybody not heard of Reddit before this? I'm curious. Yeah, probably not. Okay, why people think it's kind of funny. Leftists, Wall Street Bets, did hedge fund managers get addicted to manipulating the market and it's now costing them billions? So what they're saying here, I think this morning the Securities Trade Commission, the government regulatory agency, they're looking into it. Did anybody? Okay, so government's looking into it. So government knows that Reddit's manipulating this price big time and it's not based on fundamentals. And this is important because short sellers are always basing their bets on real things, real facts, real data. Now, their beliefs on that data and facts may be wrong, but it's based on real things. Real, what we would say, market fundamentals. So when a short seller causes large change in stock prices, that's a way of saying the people out there with information on the stock is trying to figure out what the right stock price is. But then but it can also be the case. Remember, you had to make that short sale work just within 30 days, right? And so you can make a lot of money shorting stocks and be completely wrong in the long run if you convince people in the short run. So to some extent, people are thinking, well, a lot of people who short, they're really spreading misinformation. They really are trying to manipulate the market in a way that is not consistent with facts to make money in the short run, and then the market goes right back to where it was. I'm guessing for the most part, things are based on market fundamentals. Sometimes they're not. But a lot of people kind of sick of the whole financial sector because it just seems crazy. It seems like 2008 was caused by them. That's what it feels like. During COVID, when maybe your parents got laid off and you have real harm, what's the stock market been doing the last year? It's been doing so well. And so we're hurting and the stock market's doing well. Well, what the hell is the stock market anyway? And so there's a little bit of animosity towards the financial sector. So if they're taking some losses, some people saying wham, wham, wham. Getting losers or bankrupting hedge funds. What that's supposed to signify is that a lot of people who are buying these stocks, these may be the first stocks they ever bought. Their people don't really know what they're doing at all, but they're doing it for the fun because they were on Reddit. GameStop sitting amongst Tesla and Amazon after Reddit users making a Fortune 500 company. So the thing is, Reddit, GameStop is a joke, but now there you have this huge valuation. And so here's one thing we need to ask about this. Okay, so the price of GameStop stocks went up a lot, right? Did that benefit GameStop?
If they released more stock.
Yeah. Okay, so here's how these stocks work. When GameStop at one point had an IPO, initial public offering. So when they first sold these stocks, that was when they sold them to the world and then they got their money. Whatever happens with buying and selling of stocks after that doesn't affect them at all because they've already sold their stocks. So when that GameStop stock went up, that's not giving GameStop any more money unless they sell more stock. And they can do that. If this becomes a theme. So in a minute we got to talk about, is this a real thing or not? Well, at first it seems obvious. This is not a real thing. Like GameStop stocks are not more valuable. This is just people being an ass. But on the other hand, what if this becomes such a big event that you take a certain pride in not telling people that you have GameStop stock? Does anybody have any? You have some? When did you buy it?
I bought it at 20
When was that? What? 3 weeks ago? Okay. So you've got a cool story to tell people now, right? Yeah, you've got an icebreaker. Like that's a pickup line right there. Yeah.
My $100 turned into like $2,000.
Whoa. See, he is now the most interesting person in this class, by far. What's your plan? What are you thinking about what to do with it? Are you going to sell it?
I mean, I could, because I listened to that subreddit, and people say it can go up to $1,000, so I'm just going to hold on to it.
Yeah. I saw some people on their posts that saying, hold till infinity. And there's some people, tons of money, who are willing to do that because this is fun. And so, maybe this becomes such a novel thing that maybe even GameStop wants to release a little more than say we'll never release any more. Who knows? Maybe I'll go out and buy some then to be able to say I have that stock. And if that happens, if this becomes a novelty, then it has real value. It may be because we're asses and we just think it's funny, but we're the ones who decide what value is. Can I ask you, when did you, so you were on the subreddit and you read things about it?
Yeah. Well, I initially got into this. I heard about
Yeah, we should say so. So there's something called a short squeeze. So if so what is a short squeeze?
It's okay, but if
Yeah.
they get mad.
Yeah, yeah. And you can bet there's a lot of politicians doing some good campaign fundraising right now. Big time. Yeah. You buy stocks in GameStop as the joke ages ago. Redditors start joking about investing. The stocks skyrocket in value. Billionaires who bet against GameStop lose a bad word of money. 90% of users on that subreddit after GameStop. How do you do, fellow investors? You know, so this is saying that usually we think of investors as the rich person at a hedge fund who has lots of money, but now it's people who look like that. Well, you know what I mean. Okay. 3 million Reddit editors throwing away their life savings and stimulus money into a dying company to mess up financial institutions. It's not about money, it's sending a message. Everything burns. And so, you know, if the government's going to try to, you know, maybe what they want to stop trading in this, keep the prices going up, then a lot of people are going to say, well, why is it that the big Wall Street firms can do this but we can't? Right? Like, who says what the market price should be?
The people.
That's right. This is a man of the people right here. Okay, and now this would be funny if this happened. Suppose the government, let's say, tell me a politician you don't like, or just give me a name.
Nancy Pelosi.
Okay, let's say Nancy Pelosi introduces some kind of legislation or something to stop this, or we hear she's putting pressure on the Federal Trade Commission to stop this, or we hear Joe Biden's doing this. What's Reddit going to do then?
Not get her reelected.
Yeah. They're going to jump on Nancy Pelosi now. And you know what social media can do. You know? They can raise money to go against her competitor in the next election. So who knows where this is going to go. And you've been going to university for 4 years studying the markets, and it pulls that crap on you. And, well, that is markets. That is how they work. And there's no better time to be alive and studying markets than right here, right now. Is there anything about this subreddit that's interesting that I haven't talked about? Y'all might know it more than me.
Or they did the same thing with AMC.
Yeah.
The movie theater company.
They did it or they're doing it?
They did it. That thing was at $2 and went to 18 and a half.
Does anybody, I know y'all are reticent to say, but some people may be bolder than others. Does anybody not like this and think we shouldn't let this happen, and they're kind of mad at me for laughing about this? It's okay to say. You?
No, so I'm conflicted.
Yeah.
Because I hate Robinhood traders. Skyrocket anything they want to.
Yeah.
So I don't know.
And you know, the stock market, I mean, it's a serious thing. My retirement savings are in the stock market. My savings for my daughters to go to college is in the stock market. And if the prices are meaningless, and even if people are coming and just having fun, it introduces lots of noise, and it makes it harder for other people who are trying to do something serious in this to make their money. And it's not just people, these rich billionaire buttholes who are trading. Most of our retirement savings are there, and there are financial firms managing those savings for us.
The reverse.
Yeah. Yeah, it's kind of like the saying, what's classy if you're rich, but not if you're poor? Taking money from the government. You know, that's usually something rich people can do, but poor people aren't supposed to, right? This is kind of that kind of hypocrisy. Last thing. So when you hear the word, what do you think a hedge fund is? How do you describe a hedge fund?
Like it's a huge, like you have a spoon picking to make billions.
Yeah. Yeah, I think it's basically now just a pool of really wealthy investors who can put a lot of money to use at once. But the reason my understanding of the history of this is it's called a hedge fund. So y'all took Adam O'Reilly's class on 30 through 33, and you learned what a hedge is, right? Hedge is when you do something that helps you kind of lock in a price. Something that makes you money in bad times, loses you money in good times. There started these investment firms where they would do a lot of data analysis to say, okay, we're going to buy these stocks, this group of stocks. We found this other group of stocks who are inversely correlated with those stocks, meaning when the price of these stocks go down, the price of these stocks go up. And so they would buy both of those groups of stocks at the same time. Both had a good return, and it had low risk because when the price of one went up, the other went down, the price of the other one went up, the other one went down. And so it was just a way of kind of locking at a good rate of return. But it turned out their method didn't work really well. They were trying to hedge, but the hedges didn't really work, but the name stayed. That's my understanding of why they call hedge fund. Anybody heard any different?
But these giant-ass hedge funds don't just buy equities or derivatives now. I mean, they're in hard real estate and everything
Oh, yeah.
else now.
They know everything.
So, I mean, they're not really governed by anything unless they...
Yeah. I mean, they're buying land at trailer parks
Yeah.
and hiking up the land rent. Yeah, they'll go into anything.
And they have enough money that for them it's kind of like just their cost of business to like manipulate the market in their favor. So if they have
So that you have to rebuy it, 1,700% over what you wanted to buy for.
And let me end on two things. So one thing, there's people have different opinions about how hard it is to actually manipulate markets when they're not based on real fundamentals. It's probably harder than you feel. Even if you're a big hedge fund, you can move prices a lot, but it's so easy. A hedge fund is not going to have much loyalty within there. So if you know they're selling just to try to make prices go down a little, you're going to tell your friends about it. That's going to make it harder for them to do it. It can be hard. And the final thing, so our GameStop friend, what's your name over there? Ethan? Stand up, Ethan. Let's give this great man a big round of applause. He did it. He stuck it to the man, and we love him for it. Okay, have a great weekend.